JasVXR and eToro. I don't know if he's a PI, popular investor, but he's an investor. So this guy, JasVXR, I mean, my instinct is to say JasVXR, but as his name's Jason and he's English, and typically you abbreviate English Jason names to Jace, I'm going to go out on a limb and change my initial perception as Jazz to Jace, so JasVXR. I found this guy on the 6th of January, so not long ago, but he's already one of my top contenders. This here is my star watch list, and these are the 5 people that I have my eye on currently to be my next copier. I mean, I think there is 1 or 2 more that's caught my eye since I made this, so he might be competing with another 6 people. But regardless, he's doing very well in the 6-month AI battle experiment. And Jason just left a comment on my recent deep dive basics video saying, I like what you're doing. Can you check my profile out and give me a review? Just as if I haven't heard of him. He's like, oh, hi, I'm here. And then I commented like, be careful what you wish for. I've had my eye on you. I'm going to deep dive on you. So yeah, let's go. So JasVXR, or Jazz, or JAS. I'm going to stick with Jace. JasVXR. Red Star. That rhymes. You can call me Nicki Minaj. Jason Jamie Robinson. Hello, I'm Jason. Welcome all. This is my retirement plan. Yeah, I mean, to be fair, same. Mine is going to be so long term until I die, basically. It's going to be very long, very slow. Well, not too slow, but very long. How to copy, minimum is 300. We'll come back to that. I believe the last time I checked it was 260. We'll double check. Minimum is 300. Be able to get all positions for optimal results. Consider 1K for faster results. Consider 1 million for faster results. Copy open trades. The longer you stay, the better returns. Volatility and red days are part of the game. Okay, so this is all basic stuff for brand new people, just to give them an idea of how it works. Consider starting with low investment. Make it a habit. Start to invest. 6 months. See the results. Okay. Portfolio. This portfolio covers anything from the latest tech, green energy, gaming, online retail, crypto, and medical to cover diversification and low risk. The strategy. I'm a long-term investor that looks for value in companies, how they affect the future, and how they adapt. Market goes up, hold. Market goes down, buy. Fundamental and technical analysis, no leverage. Brilliant. Adapting to market trends and changes. Cool. 3,370 followers. Okay, so he's not super unknown. He's getting there. 910 copiers. Nice. Okay, let's see. Does he have a pin post? There we go. Pin post. 9 hours ago. Okay, so maybe he pins often. Let's have a quick look at all this. Okay, let's go over pin post. Just briefly. Correction day, now more like a discount day. Because maybe last week started giving all 7 days of green in a row. Which explains why he's done well for the AI experiment battle. This is why I always carry available cash. A dip today, you have to buy. Yeah, that's fair. So stocks in the crash market today. Okay. You can have a read of that. I mean, it's kind of basic stuff. Okay, so that is his feed page. Let's have a look at stats. So he only started in 2020, which some people will be like, oh, no, I need some history behind it. Sorry. Let's go to, but I'm okay. You could have 10 years of history and then suddenly the next year is just, everything goes crazy. I mean, you can't predict the future based on it. So, I mean, I'm okay with 6 months history now. So 2020, 124%. So minus 0.47 for May, 10% in June, 14% in July, 17% in August, 1% in September, 6% in October, 31% in November, 5% in December. And this year is already 42%. So 18% in January, 19% in February. 910 copiers. Looks like a relatively organic incline. I mean, it does start to straighten up a bit here, vertically straighten up. So I'm not sure. Risk score 6. Drawdown is good. Minus 5% daily, minus 8% weekly, minus 9% yearly. So I mean, considering 124% last year and 42% this year, 9% yearly drawdown, very good. $2 to $5 million assets under management, 461 trades, mostly stocks, some crypto, and a little bit of ETFs. 87% profitable. 11 trades per week, 1.5 months holding time, active since 2020, the 24th of the 5th. Profitable weeks, 68%. Okay, stats done. Let's have a look at portfolio. Oh, Jason. Lovely. 4%, or 3.83%, so very nice as his highest. Lowest is 0.41. Okay, let's quickly do this whilst we're here. Divided by 0.41, so 243, so 250 is the bare minimum. I would say, 260. I would say 260. I mean, 300 if you have it is ideal, just to make sure. But I mean, if you're low on funds, 260, I think is good. Okay. Oh, some nice diversity here. Well, in regards to the stocks at least, I mean, there's things there I've not seen before. It's just nice, pretty colors for my layman eyes. How many has he got? 78. Ooh, I like. He's doing it for me here on the portfolio, on both accounts of minimum and very cool. All right, chart. As compared to NASDAQ. Okay, so let's do last year's 2020. I mean, it looks like he didn't start until... Let's just do when he started. Okay, so the NASDAQ does clip into his progress a little bit. Here, and here, and here, and a little bit here for this section. But other than that, he's outperformed it during this time period. And NASDAQ looks like it's getting the better of him here. Just a little bit. And then he takes off. Right, let's get into the juicy bits. Let's get into the actual deep dive. Just before we start on the actual deep dive section with the graded review, someone commented previously saying that having a large amount of assets, like maybe 60 assets or 40 assets, isn't always like the best way. He was saying, he's copying someone that's only got like 10 assets and he only uses, he's always got between 10 and 70% of his balance not used. And he uses a concentrated style where he focuses on only like between 5 and 10 assets at a time. And he doesn't have loads of them because he doesn't want to hope for the best. I mean, I don't know how I feel about that. When I first saw that, I thought, okay, this is a new style. Maybe I need to rework my deep dives because having lots of assets doesn't mean it's safer. But I've had a little think, and I think maybe it is better to have more because you're not hoping for, you are hoping for the best in a way. I mean, you do your educated guesstimates and research, and you hope for the best. You don't know how it's going to go. The more, the better, because it's like a safety net. If you have 10, it could go a lot worse. And this guy in my example was saying he uses he was using, I think he was using something like, I think it was ETFs to hedge his bets as a countermeasure. I don't know. What's your thoughts on that? Do you think having so few assets is riskier, and then sort of hedging your bets with one sort of category of assets, if you like, which is the ETFs, having all that balance on hand, which I imagine he would do an Olivier Danville and just inject it all if it's going in the red, push that ETF up, assuming that the ETF's going the right way. I don't know. What's your thoughts? But yeah, let's go into the JasVXR deep dive. Before we start, I'm not going to go into, starting from now on for the deep dives, I'm not going to explain how I got to the number that I've come to. I will either leave a link in this video on the screen somewhere here, or in the description to the previous video which I did, which is a deep dive basics. It's like a breakdown. So have a look at that if you haven't already. If you're new here and you haven't seen a deep dive before, that will tell you how I've come to these numbers. You know, the algorithms, the math formulas, the boundaries, that stuff. So I'm just going to not rush through it. I want to savor it because it's nice. It's better than I expected. But I'm going to go through it faster than I normally would if I stopped talking. That is. Okay, so social informative. He had 10 posts in the last month. And that was real posts, as opposed to the absolute mass insane volume of every trade he did. The one that pops up and says, you share it like, hey, I've just closed this with a profit of, there were so many of those. So I obviously didn't count those, but that's a good thing, I think, because it'll tell people, what you've opened and closed. So it's nice to have that, whether it's all the time or sometimes. But I didn't count those. He had 10 legitimate posts. So on top, with those two things combined, 10 out of 10. Brilliant. Statistics, as I said, 124% for last year and 42% for this year. So as far as I'm concerned, he's sort of blown it out the water. But also, I said in a previous video that you wouldn't get a 10 out of 10 unless it's consistent, like maybe 3 years, and you've always had 100% plus for the 3 years. So as he's only just started, it's hard for me to give him a 10 out of 10, unfortunately, so he gets a 9. The portfolio quantity, as you saw, he had like 75 assets, which is insane in a good way. So it gives it a nice level of safety and security, in my opinion. Hedging the bets, so to speak. So 10 out of 10. Risk management. 3% has to be the biggest trade he has to get a 10 out of 10. I think he had a 3 point something. So, you could be inclined to say, well, it could be a 9, but that'll be pushing it if he had, if he had a 6%. So I think it was in multiples of 3 that I did it. Yeah, so it's in multiples of 3. So, to give him a 9, he would be having to have a 6. And 3 point something is a lot closer to 3 than 6. So 10 out of 10 for risk management. So far he's got three 10 out of 10s and a 9. Like, this is a lot better than I thought it would be. Not that I thought he was bad, because obviously I thought he was good, but he's like one of the best in regards to my deep dive algorithm. My deep dives, he's hitting the numbers well. Drawdown, he had minus 9% for the year. And I did it in multiples of 5. So if he had minus 5%, he would have got a 10 out of 10. Minus 10% is a 9 out of 10. So, round it, not round it up or round it down, but just round it to the nearest. So 9 out of 10. Affordability, if you could have $200, 10 out of 10. 300 is 9 out of 10. He recommends 300, but I've calculated it to 260. So 9 out of 10 for affordability. And finally, synchronization. He has, from what I remember, 247 trades in the last 3 months. So that's way over 100. 10 out of 10 for synchronization. So all in all, one of the best mOth copy trading deep dives that I've done. You got 4 10s there and 3 9s. That's ridiculous. That's very good. Well done, Jason. Cue the confetti and stuff. Well, that does it for this video. Thank you, Jason, for taking part. Not that you did. You didn't take part. I kidnapped you, effectively. Thank you for being kidnapped in this video, Jason. But yeah, that does it. I hope you enjoyed it. Hope you've taken something away from it. Maybe a new person to add to your watch list. See how he does. Obviously, he's not got too much history. Someone to keep an eye on. He's a dark horse, an underdog. He's doing well, and he'll be within my next 5 to 7 people that I want to copy. So well done, Jason, and thank you everyone for watching. I really appreciate it. Take care, and I'll see you in the next video. Take care. Cheers.